Hello ladies and gentlemen, and today I'm going to be discussing dynamic trend lines, Fibonacci sequence, and a little bit of candlestick pattern. Now that is a lot to wrap up in one nutshell, so I'm going to be leaving timestamps in the description so people can just skip over if they're already familiar with some of the information that I'm giving. So stay tuned. So in the first video, we covered the first part of dynamic trend lines, and that was horizontal lines for support and resistance. What I didn't cover was the diagonal lines that can also be used as support and resistance. So let's get into that. Those of you who don't know what dynamic means, all it is that the lines are constantly changing. Remember, I mentioned that in the first video, support will become resistance and resistance will become support. Key rule in drawing these trend lines, as I mentioned in the last video, you always trade the reaction of the line. You never actually trade off of the line itself. Doing this can be dangerous because why? It messes up the psychology of all traders. Stop hunts are something that constantly happen in the market and constantly need to be looked out for. If you're not looking out for these, at the end of the day, you will be successful in certain places, but find yourself in the long run not being able to sustain any strategy. So without any further introductions, let's dive right into the charts. Now, the first example of a dynamic trend line I have for you guys is on the S&P 500 4-hour chart. Due to the current market conditions, I had a very hard time finding examples of diagonal trend lines, but I did my best. So the first one I have here, like I said, is the S&P 500. I'm going to clear it. Okay. Head over to our line here. We're going to drag and drop it in place. So that's what that trend line would look like. Now, obviously, this market has already played out to this trend line. So eventually, I'm going to do live market analysis where I'm actually going to put a trend line prior to the market moving, and hopefully, more likely, it will respect. An example I have is on the NAS 100. Now you'll start to notice these are currency pairs that I like to work with. So you'll be seeing there's a consistency in the pairs that you see me using. So I'm going to clean this up again for you guys. Go over to my trend line here. I'm going to draw it in. So this one was slightly stronger. Why? Because we had 1, 2, 3, and then it actually broke down here and became a resistance. So this was a good confirmation that this was a pretty strong trend line. If I draw a horizontal line here, I have a confirmation of a horizontal resistance there. See if I can draw another one in here. No, it doesn't look as clean. See if we have another one here. Well, as you guys can see, horizontal and diagonal trend line to make up your dynamic trend lines. All right, and that's it for trend lines. Showed you guys the 4-hour on the S&P, the 1-hour on the NAS, and like I said, due to current market conditions, market's very choppy. It's going sideways. As you can see, the Japanese yen, US dollar to Japanese yen here, literally completely going sideways. Leonardo Fibonacci, the creator of the Fibonacci sequence. The Fibonacci sequence is a sequence of numbers where each number is the sum of the preceding two, starting from 0 and 1. So we're going to do the same thing. We're going to get on a S&P 500 chart. We're going to go to the 4-hour. I'm going to clear this. All right. Jump on the daily chart. And remember what I told you when it comes to drawing anything or any line. You always want to match it up to the place where you can get the most touches in the market. So I'm going to draw this line in, and then I'm going to explain to you exactly why I drew it, where I drew it. Okay? Ready. So the reason why I drew it there is because we had this position in the market here, which looked very important. Okay, so I'm gonna get some circles. So right here we had a gap. Sorry. Right here we had a gap. Okay, and another time we had a few touches that came very close there, and a few candle closes right here. Okay, and if we drop down, we get another line here. We got the 61.8 line, which acted as a resistance line at some point. Also, the 61.8 also lines up perfectly with that old resistance there. We got there, we got here. Okay, so that's the fib. Now down here, why I drew it like this down here is because all of this, I clear these lines. So use stars to, or X's to point that out. All of this was, I believe, to be stop hunts in the market. So this is, I think, a better zone to be drawing the end of your fib line, because there was a lot more touches, a lot more going on in this area than there was in this area. Alright, so always draw your line to where you can get the most touches. We're going to clear that. And now I'm going to jump on a USD JPY to show you guys something very similar. Clear it. Same thing. I'm going to grab my fib retracement. Mind you, I'm using the retracement line, not the fib expansion. Same thing. I'm going to draw it in a position where I can get the most touches, right? So I'm going to start here. I'm going to draw it all the way down. I'm not going to draw it to the wick. I'm going to draw it to the close of this candle. Okay. Put some red lines. Close. 61.8. 61.8 is my golden ratio personally. It's the ratio I'm always looking for. The 61.8 line is my bread and butter. As you notice, the 50 also held as a support as well. So that's where you want to be drawing your fib. In places like higher time frames where you know this fib line is going to do the most damage. Right, so you see how I drew it around the 50. We're going to get some circles in just to show you guys the zones. Okay, wick there. And as you can tell, the fib did hold up in the current market condition when it came back to retrace. Right, so the market came down, came up, came down, and now it's holding as a support and as in some places of resistance. Okay, I personally don't use the fib too often to trade. I like to go off of daily closes in the market, but I'm just showing you how the fib works and how you could use it to your advantage to confirm support and resistances in the market. Just to recap, always draw your lines in the places where you can get the most touches. That goes for all dynamic trend lines, horizontal and diagonal, and for your Fibonacci sequence. Alright? Third, last but not least, we're going to cover one candlestick, and that's going to be the doji. So same thing as before, we have a USD JPY chart, and we are on the daily time frame. I'm literally just going to draw a picture, a circle over the doji. Right? It came up and created two of them. Now these don't always hold up by themselves. Dojis hold up in places where there is already support and resistance that can be identified. So if I draw a line here, as you can tell, it was a resistance line at some point where that doji was created. Alright? So candlesticks are literally just another way of confirming either a resistance or a support. What you're doing is you're trying to use as many things to confirm something that you're about to do, right? You don't have to use too many, but the more you have, usually the stronger the trade is. And remember, higher time frame, a lot better setup. Okay, so third, we covered the doji. If you want to use it, you can. It's really up to you. It's just about confirming. You have support and resistance as a basis. Every other indicator on top of it is simply confirming that support or resistance line. It's like how you can tell the Fibonacci, same thing. All it did was the 61.8 line, a very golden ratio, it lined up with a resistance line. So now if Fib is telling you that's a resistance, the market is telling you after 2 bounces it's a resistance, it's more likely a resistance line. All confirmation. That's it. Appreciate you guys tuning in again for this one. Like, comment, and subscribe, and stay tuned for the next video.